This video covers Tokyo Electron's first quarter financial results for FY 2026 from April to June 2025. Tokyo Electron, or TEL, is a leading manufacturer of equipment for semiconductor and flat panel display production. Tokyo Electron provides machines for processes such as etching, coating, and inspection, and also offers maintenance and support services. Its business is heavily influenced by government policies, export regulations, and global chip demand. Recently, Tokyo Electron has drawn attention as one of the so-called Takaichi stocks or Takaichi trade. This refers to companies likely to benefit if Sanae Takaichi, who advocates bold fiscal spending and support for domestic electronics including semiconductor industries, becomes the next prime minister. In the first quarter, net sales decreased by 16.1% from the previous quarter, partly due to a temporary pause in customers' capital investments. Gross profit declined as the ratio of fixed costs to net sales increased, resulting in a 21.3% drop in operating income and a lower operating profit margin. Net income also declined by 17.6%. The progress rate is 26.5%, but the annual net income forecast expects an 18% decrease from last year. In the first quarter, sales in Japan and Taiwan were stable. However, sales in China remained weak, similar to the previous quarter, and this was a major factor in the overall profit decline. The semiconductor process has three main stages. Design comes first, where chips are planned and circuits are created. Wafer fabrication follows, forming circuits on silicon wafers using lithography, etching, and deposition. Finally, assembly and testing packages the chips and checks their functionality. Tokyo Electron makes machines for wafer fabrication, semiconductor production equipment, new equipment sales by application. Tokyo Electron's wafer fabrication products can be divided into three categories: DRAM, non-volatile memory, and non-memory. DRAM is memory used to temporarily store data in computers and other devices. Non-volatile memory keeps data even when the power is off and is used in smartphones and fast storage devices like SSDs. Non-memory refers to chips that are not mainly for memory, such as those that perform calculations or special functions. In the first quarter, sales to non-volatile memory and non-memory customers remained roughly flat from the previous quarter, while sales to DRAM customers declined significantly, partly due to their intensive spending in the previous quarter. This reflects that DRAM manufacturers held back their investments this quarter. Tokyo Electron expects semiconductor demand to remain steady. However, wafer fab equipment sales may fall in the first half of 2026 as customers invest more cautiously to improve efficiency and balance supply and demand, with the market now expected to shrink. Fiscal year 2026 financial estimates. The FY 2026 financial forecast was lowered to reflect the current status of customer investments. Although the market outlook for semiconductor manufacturing equipment from January to June 2026 has been revised downward, strong growth in semiconductor demand, especially from AI server applications, remains unchanged. Dividend forecast. The full-year dividend per share is expected to be 485 yen, down from the previous 592 yen. The earnings outlook has also been revised downward, resulting in a disappointing outcome and a dividend cut this time. Cutting-edge chips indispensable for AI servers. Tokyo Electron expects the semiconductor market outlook remains strong, driven by next-generation AI server chips planned for calendar year 2027. Increased GPUs, graphics processing units, and memory will boost computing power, and investment from the second half of calendar year 2026 is expected to expand business opportunities, research and development, and CapEx plan. After completing a new development building in Miyagi in April, Tokyo Electron plans to finish a development building in Kumamoto and a production and logistics center in Iwata this fall. These new facilities will strengthen R&D and production, expanding opportunities for next-generation semiconductor equipment. Recently, Japan's government announced plans to support the development of a domestic AI model to reduce reliance on overseas AI. Concerns over data outflow and false information make this a security priority, and resources will be provided to Japanese companies to build reliable AI using local data and technology. Tokyo Electron is not mentioned directly, but there may be spillover effects in the future. Stock price. This chart over the past year shows the stock price in Japanese yen at 25,610 as of September 19th. This chart shows the stock price in US dollars at 89,115 as of September 18. After the earnings announcement, the stock price temporarily fell sharply due to a downward revision in August. However, recently, driven by expectations of a new prime minister and the rise in semiconductor-related stocks, Tokyo Electron's shares have surged. Current PBR is 6.32 and PER is 26.4. Dividend yield is 1.89%. Compared with historical PBR, PER, and dividend yield, these figures suggest that the stock price is roughly in line with past averages. Conclusion: Tokyo Electron faced a challenging start with weaker sales to DRAM customers and a downward revision of its financial forecast. However, steady semiconductor demand, strong growth in AI server-related chips, and upcoming new production facilities support future opportunities. With rising AI demand and the potential election of Prime Minister Sanae Takaichi, Tokyo Electron remains a stock with considerable upside potential.